Hey credit warriors, Credit Shuffle here, and we have another real estate video for you today, and I'm kind of going to be talking about something that happened in the process of buying my house. Now, I've been sitting on this for like 6 weeks or so because I didn't want to talk about anything to do with this, buying this house until the deal was closed, okay? Because you never know, it could all fall through. But it didn't fall through and we're sitting in it right now. And today we're going to be talking about why an FHA loan might not be as good as you think. Now, there are a lot of people on YouTube, a lot of realtor and real estate YouTubers. They often sing the praises of the FHA loan, okay? Saying, oh, if you don't have much money and you don't have a good credit score, you can still buy real estate, don't worry. There's this FHA loan, the government guarantees it and stuff. And they kind of sing the praises on it without really telling you about the other side of it, okay? Now, I'm sure these guys are professionals, so I'm sure they know all the information about it, but they just tend to sing its praises a little bit too much. And I tried to use an FHA loan to buy this house, and I failed. The seller would not accept my loan. And this is a side of it that a lot of people don't seem to talk about so much. People are normally singing the praises of it. Same with VA and USDA loans. Those are two other types of loans. So today we're going to tell you the story, okay? So I'll first tell you the story of how I failed to use an FHA loan and had to convert to conventional, and then we'll go a little bit deeper into why this is, okay? The kind of regulations with the FHA loan. So if you don't know, FHA loans, they're basically a government insured loan. They have mortgage insurance with them. They allow you to put a down payment as low as 3.5%, and they also allow you to have a bit of a lower credit score and also a higher debt to income ratio than other loans would allow, okay? But they've got some increased requirements as well, which we'll talk about in just a moment. So the reason I went with an FHA loan, first of all, was because I'm self-employed. I had to use 2 years worth of tax returns, okay? So 2017 and 2018. Now, 2017 was significantly lower than 2018, okay? And that gave me with a problem, because what they do is they take an average of those 2 years tax returns. This is if your business has been around for less than 5 years, okay? If you're W-2, you can just use 1 year's tax return. But if you're self-employed, you have to use 2 years if your business has been around for less than 5 years. If it's been around for over 5 years, then you should be able to just use 1 year's tax return, your most recent one. But for me, they took an average. So because my 2017 income was significantly lower than my 2018, it brought me down a lot. And I ended up somewhere around $50,000, $60,000, like this sort of very average, I think it was 60,000 in the end. Very average household income for the US, okay, pretty much bang in the middle. So that meant that it limited the amount of money I could borrow, because otherwise my debt to income ratio would be too high. So the reason we went with FHA was because the debt to income ratio could be a little bit higher, okay? And the mortgage broker knew my real income was quite a lot higher than the income he was allowed to use. So he didn't worry about the debt to income ratio being high, because what he was using wasn't my actual income anyway, all right? So we went with the FHA loan. We looked at this property, okay? It was actually the first property we looked at. We were very fortunate. The first one we even looked at, we absolutely loved, and we put in an offer on the day. So originally this was on the market for $239,000. So I put in an offer. On the same day, someone else put in an offer as well. I even saw the people actually walking around, and they were like, it was a family, and they were like, oh, it's so nice, our kids will love it. I felt a little bit guilty when I beat them in the end and got the house. But anyway, on with the story. So they then put in another offer a few days later. They upped it by about $6,000, took it up to $245,000. So I was forced to go up and match their offer because I really wanted the house. And then the seller looked closely at my letter. Okay, so he accepted my offer because I had been, I'd been the first offer anyway. So he was going to go with me, and then he got the next offer, and then he was like, well, if you match it, I'll go with you. But when he looked closely at my letter, he saw that I was FHA, and he realized the other people were conventional. And so he basically told my realtor to tell me that, because you don't communicate directly with the seller, you normally communicate through your realtor, because it can be a bit awkward, right, if there's a conflict or whatever, so you do it through the realtor. But anyway, he told the realtor to tell me that if I can't convert to conventional within 24 hours, he's going to give it to the other people, all right? So there's like a lot of pressure. So I was forced to come up with some extra money so I could put more. I think originally I was putting about 5% down, all right? I was forced to come up with extra money in the last, within 1 day, so that I could take that down payment up, so I could borrow less money, which would bring my debt to income ratio down enough so that I could qualify for a conventional loan, okay? Because my credit score was good enough. It was like 740. It was good enough for a conventional loan. My down payment was fine, all right? Conventional, if you don't know, conventional also allows you to put down payments as low as 3.5 or even in some cases 3%. It was really just the debt to income ratio for me, which was the reason why I had to go FHA. So I did manage to scramble. I had a little bit of a gift from my parents. You can use gifts as, you know, part of your down payment. I took some money out of accounts that I didn't really want to touch, and I, you know, scrambled to pull together. I had to halve my investment portfolio, unfortunately. It's a shame, but anyway, I scrambled together enough money to get a down payment of, I think 18.5%, and I qualified for a conventional loan with mortgage insurance. And then a few days later, I kind of rethought it and thought, well, you know, I'm almost at 20%. I might as well come up with a little bit more. And I was earning money, you know, our income is quite high month to month now because we're doing a lot better on YouTube and stuff. So within another month, I'd earn enough money to bring that up to 20%. I think it was like 5,000 or something I had to put down to make that extra 1.5%. So I got to 20%, which got my mortgage insurance canceled, okay? No longer needed mortgage insurance, which lowered the debt to income ratio even more. So I was solid on a conventional loan by then, and I was able to get the house. But why would the seller not accept an FHA loan? Well, basically it's because the FHA appraisal and inspection is a bit stricter than a regular loan. Okay, let's have a look. This is from the FHA. When an FHA loan is being used, the appraiser has two objectives. The Department of Housing and Urban Development, HUD, requires him to determine the current market value, as with any appraisal, but they also require a property inspection to make sure the home meets the HUD's minimum standards for health and safety. Now, as soon as you hear the word health and safety, normally anything to do with that is ridiculous, all right? I mean, I have to have workers' comp insurance for my one employee who does video editing for us, and the person who sold it to me literally said that we're insuring her mainly against things like paper cuts. Like literally, I had to buy insurance for paper cuts, okay? So when I hear health and safety, I'm instantly like, oh my God, this is gonna be a nightmare. So yeah, you guessed it, okay? So the requirements for the health and safety side of it are more strict than a regular loan. And guess what? Those requirements fall on the seller, okay? It's the seller who has to sort it out because it's their house, right? Before it's sold, it's their house. They have to sort it out before the loan can be approved. Now, for newer properties that are already up to code and stuff, this actually may not be too much of a problem. So in some cases, an FHA offer may be as strong as a regular offer from this point of view, okay? Because, you know, if it's a newer home, everything's like brand new, it's all up to the most modern building standards and everything like that, it should actually be fine health and safety wise, okay? Or even with this more strict health and safety. But even that way, FHA can still take a bit longer than a regular loan. It takes a little bit longer. But anyway, with older properties, okay, like this one, this was built in 1907. It's funny, someone made a comment, we're waiting for the videos about the haunting, right? I thought it was very funny. I did actually have a dream that the house was haunted, but the ghost was friendly and it would help you find your car keys and stuff like that. It was very amusing. I woke up laughing. But anyway, back to the story. So with this house in particular, this was built in 1907, so well, you know, quite a long time ago, okay? There were two things which my realtor told me, if we go FHA, you're probably gonna run into problems with this during the appraisal, okay? The appraisal and the inspection. One of those was that there was no there was no rail on the staircase downstairs, okay? Going down into the basement, and we'll show you a picture of that. So basically they require all staircases to have stair rails, okay? And this one didn't. Now, for a normal loan, that does not matter. Do I care about a stair rail down there? No, it's more for kids that you need a stair rail. I'm not gonna let my kids just randomly go down into the basement. No way, okay, that door is locked. But anyway, the FHA requires it. Every staircase must have a stair rail, okay? So that would be one thing that the seller would have to fix. Then there was also quite a lot of paint peeling at certain places in the house, right? I'll read you the FHA's requirements for paint. Lead-based paint and other hazards. If the home was built before 1978, the appraiser should note the condition and location of all defective paint in the home. Inspect all interior and exterior surfaces, walls, stairs, deck, porch, railing, windows, doors, for defective paint, chipping, flaking, or peeling. Exterior surfaces include those surfaces on fences, detached garages, store sheds, other outbuildings and structures, whatever. So they're really strict. You can't have any peeling paint on properties older than 1978, and that's because lead paint would have been used in the past, okay? Now, the seller may have repainted, all right, but they don't know. There may be still some lead-based paint somewhere in the house. And if it's chipping off and peeling, you know, little children can pick up the chips and put them in their mouth and stuff. So you don't want anything like that really, okay? It is a safety hazard. So the FHA basically says if there's any paint peeling anywhere in the home, no matter whether you know it's not lead-based paint or not, it has to be painted over. It has to be redone. Okay, so I had peeling paint on the rear porch. You can, you know, take a look at this. Now I don't care if my porch has peeling paint. I could paint it myself, but unfortunately, before the loan is approved, that would have to be repainted. I've also got some peeling paint down in the basement. Again, I hardly ever go down there. I really don't care. It's only a storage space anyway, but that would also have to be repainted. So these were a few of the requirements on the seller. Now, the particular seller of this house, he'd already bought another house. He really needed to move quickly so he could use the money from this house to, I assume he'd had a maybe a short-term loan, or anyway, he just needed the money of this house to pay off the other house, okay, that he'd just bought. So he wanted to move quickly. He'd already had one offer fall through on this house, so he just wanted to go as quick as possible. He didn't want the hassle. So FHA loans, he would have had to have done this stuff, and also FHA loan can take a little bit longer anyway with the appraisal, a week or two longer than a normal loan. So he just didn't want to go near it, okay? He didn't want to touch it. Now, some people could say that, you know, as part of your offer, you could offer to pay for everything to be, you know, done. Like if there was painting to be done, if there was stair rails that needed to be fitted, you could offer to pay for that. And in some cases, the seller may accept it if you offered to pay that, and like they had to do it, organize it, but you would pay it. But in this case, the guy just wanted to move quickly. He didn't want to deal with the headache of anything like that. So I absolutely had to convert to conventional, and I couldn't get my FHA loan accepted. So that's kind of the story, and that is why don't think FHA loans are just this like wonderful, glorious thing that you know, that you can get that's going to get you a house, okay? They do have their own limitations. Sure, they can be great under some circumstances, but I think with older properties and also in markets that are more hot, that have more offers when you're competing with other offers in bidding wars and stuff like that, FHA loan puts you in a weaker position than a conventional loan. It definitely does. In some cases, it may not be that much of a difference. Your offer may be almost as strong as the conventional, but in some cases, like my case, an FHA offer was definitely nowhere near as good as a conventional, and when competing against a conventional at the same price, the seller did not accept it. Okay, so that's just something to be aware of with FHA. And don't forget, with conventional loans as well, you can actually put down very low down payments, like 3.5%, even 3%. It's just that you have to have mortgage insurance, same as the FHA. So the only real difference is the FHA will approve people with lower credit scores and will also allow you to go higher on the debt to income ratio side of it. Okay, so that's really the main areas where FHA helps. It's not just for people with small down payments, because you can do that with conventional as well. So guys, I hope you have enjoyed that video on real estate and FHA loans. Remember, I am not a professional realtor, so everything I'm talking about in this video is from my personal experience, okay? This isn't some official rule book or whatever, okay? It's just from personal experience, sharing with you the story of buying my house. We will probably do a few more videos on real estate, like how to prepare your credit for a mortgage application. I think some people are interested in that. Maybe also a house step-by-step how to buy a house guide, something like that as well. So guys, please leave your comments below. Have you encountered any of the problems like this, or maybe you've used an FHA loan successfully? I'd love to hear your thoughts. As always, subscribe if you're new. We'll see you next time. Bye-bye.